Good morning and welcome to NYSE Live. I'm Ashley Mastronardi. Equities are fractionally higher this morning following fresh earnings from two of the biggest names in tech. Shares of Amazon are up over 12% in extended hours trading after the firm reported a 20% increase in its cloud computing unit's revenue in Q3, while Apple is also on pace to open in the green after CEO Tim Cook said that it expects Q4 revenue to be, quote, the best ever for the company, end quote. Investors are also monitoring the latest developments on trade after U.S. President Donald Trump and Chinese leader Xi Jinping agreed to a one-year trade truce following a meeting in South Korea this week. On the Fed front, traders are pricing in less than a 70% chance of a rate cut in December. That's down from over 90% earlier this week. That's according to the latest data. This comes after Fed Chair Jerome Powell said on Wednesday that an additional rate cut this year was, quote, not a foregone conclusion. The central bank slashed interest rates for a second straight meeting this week. Amid an eventful October on Wall Street, markets remain on pace for a winning month. Entering today's session, the S&P 500 is up 2% over the span, while the Dow is on pace for its sixth straight month in the green, which would be the index's first such streak since 2018. Here's what else is on tap this hour. NYSE-listed energy services company Emera will ring the opening bell to celebrate its recent listing. We'll have extensive coverage of today's festivities throughout the hour, including exclusive access to CEO Scott Balfour's executive remarks and one-on-one interview with him later in the hour. Elsewhere, last week's Health USA 2025 event aimed to transform the next decade of health. Jody Tropiano Green, Health's head of content, reveals which moments stood out the most. Plus, today is Halloween. An NYSE-listed Build-A-Bear workshop is getting into the holiday spirit. CEO Sharon Price John joined me recently and revealed why consumer trends look like a treat and not a trick for the company. But we begin with the markets, where investors are digesting a slew of headlines. Everything from fresh earnings to the latest trade talks. Joining me now for more on this is Jay Woods. He's the chief market strategist at Freedom Capital Markets. Jay, welcome to the show.
Good to be here. Happy Halloween.
Happy Halloween. Love the festive color and the tie.
We try.
So welcome to the show. A lot is going on this week.
Yep.
The Fed cut 25 basis points. Jerome Powell signaling that we may not see a second rate cut in December. What is your take?
Yeah, I think that was the big take. In fact, the panel had two dissensions. One for more cuts, one for no cuts. So to me, the story is we're unsure. Jerome Powell telegraphed that. He said it is not a foregone conclusion, far from his words, that we are going to cut in December. And one of the reasons is this government shutdown continues. It has not had an impact on the market yet. But if we go through this weekend into next week, this could cause a problem. You have a lot of people not receiving money. This is going to grow louder, the chorus against the administration and the finger pointing, but the impact on GDP will be felt as we go forward. So to me, this is an impact. And then the data that the Fed wants, we're relying on surveys. He's talked about the Beige Book. The Beige Book is a survey of different regional economies, not the overall economy. And surveys, you never know what you're getting back. With the CPI, the PPI, and then the Fed's preferred inflation gauge, the PCE, which was supposed to come out today, by the way, we don't have the data that they like to look at when making decisions. So he did a good job. He said the available data is telling us that this was the right decision at the time, but not a foregone conclusion. The second that came out of his mouth, the S&P 500 sold off about 1% from where it was trading at that time. Now we're focused on some good earnings, which we can talk about. But I think next week, as we've gotten over the major hump of the majority of stocks reporting earnings, we're going to focus more on economic policy. And you said 60, 70% chance of a cut in December. I was surprised it was that high. I think it's less than a coin flip that we cut in December based on what Powell said.
And I understand November and December, historically good months for the market. Do you think if the government shutdown continues, it can impact that record?
Yeah, well, we're up 6 months in a row. Longest streak since 2021, which was a heck of a year for this market. That was 7 months. So we've had a nice run. I thought we were going to digest in those seasonally weaker months of August, September. We'll see what November brings. But yes, to your point, November through May is the beginning of the best 6 months of the year. That's just statistically true that these months are where we see people, in this case, November, December, chase performance, try to get into those winners. So I think we're going to find the earnings growth continues to be there. And if we are on that trajectory, yeah, November, December should continue to take us to new highs. But the run we've gone on, given all the headlines, is a little head scratching. So if we get a little bit of a pullback, I think it'll be temporary and one that investors are still going to buy because I still think we have strong momentum going into 2026.
And let's talk trade. President Donald Trump just met with Xi Jinping.
Yeah.
How is that impacting the markets?
First of all, you say that name so easily. I can never say Xi Jinping. It just does not roll off the tongue. How will it affect markets? It didn't. We were hoping for more of a hammered out deal. It became more of that taco trade where he backed down on certain things. We didn't really get anything out of it. What we got is, okay, we have good relations with China. We're going to meet with them again. One trip to China. China is going to come to us. So at least the rhetoric has died down, but any strong resolution that's going to give us guidance as to how these companies are going to be able to invest in China, nothing on chips. That was something that people wanted to see. So to me, it was good that the rhetoric has died down, but as far as looking for resolution and more open trade with the Chinese, it didn't give us much of anything.
We also saw multiple Mag 7 companies report earnings this week, Apple and Amazon yesterday after the market closed. What is your take on that?
I love this. Yeah, 5 of the Mag 7 reported. 2 of them were breaking out. So as a technician, I'm looking, how is price going into these earnings? We had Meta and Microsoft had new all-time highs last quarter, and they never got back to those levels. And then when they had earnings, they both disappointed. Meta has me a little concerned. I'm watching that 200-day moving average. Something has changed there. The story had been CapEx spend, and these companies were rewarded for spending money. Well, okay, you're spending money still, and now all of a sudden that narrative has changed. Where are the results? The results were Amazon, AWS, the cloud. That stock finally broke out. So we're seeing rotation in the Mag 7. Amazon looks fantastic. Broke out on a gap above 240. We'll see when it officially opens in a little while. That looks like it has momentum, and that's where the rotation should be. So if you're not in Amazon, I think you want to chase this stock. Any pullback to 240 should be a golden opportunity to buy it. You talk Google, you talk Apple. Apple has become more of a staple of our lives, a utility. Their revenue just keeps cranking. Still no AI story, but no one cares. They keep just hitting on all cylinders without spending as much as some of their competitors do. So to me, the Mag 7, we see rotation there. Meta, Microsoft are on the sidelines for a little while, but the wind at the sails of Google, Apple, and Amazon, to me, that's fantastic. And then we'll talk about Tesla in a couple weeks. That pay package, November 6th, the vote comes up. If there's an issue with Elon Musk and he decides, you know what, I may be done, then Tesla stock should be in a little bit of a perilous time. We'll talk about that as we get closer, though.
What's your outlook for the rest of the year?
The outlook for the rest of the year, I'm still positive. I still think there's a little more juice to be squeezed out of this orange. Yes, yes, I'm in theme for that line. But I like the broadening aspect of things. I like the small caps. If rates can stay stable, we get one more cut, they'll continue to go higher. I want to see transports and some of those lagging sectors continue to do well. When you talk small caps, you talk regional banks, which we've talked about before, and biotech. There's been a lot of M&A in that sector, and the stocks that have been beaten down are starting to turn around. So people may look for opportunities. That's where they may go. But the Mag 7 names, I think you're going to see some churn within the 7, and it's not going to be the catalyst that will continue to lead us. And I think we'll see some catch up from some of the names that have beaten down. And if that happens, it may not put the S&P well over 7,000. I think we'll touch it at one point. Will we close there? That'll be the question in the next few weeks. And then Fed policy. They don't cut. The rhetoric could get very loud. There's been dissension in the Fed, and that may put this rally on pause to the end of the year. So the highs, I don't think they're in just yet, but I think we're close to them. And then we'll talk about 2026 on another show when I come back.
Are you following anything right now, Jay, that might be a little bit under the radar that you think is going to make a big splash? Like, what sectors are you looking at?
Yeah, I mentioned biotech. I did a deeper dive with my team looking at some of these stocks. People don't realize the biotech ETF, the IBB, is the one I track, is up 25% year to date and is on a tremendous uptrend. It still has a long way to go to get back to highs. We've seen M&A where some of these bigger companies, Pfizer's and Merck's that trade right behind us, are looking for dance partners to find that next big drug. I continue to think that that will be where we go. And then when you look at headwinds, well, the administration is trying to fast track a lot of these drugs. If we can get some of these drugs, a Sarepta, an SRPT is a stock that I was looking at technically, it's down 81% for the year, but technically it looks like it wants to reverse. They're waiting on one FDA decision about one of their drugs, and one that I can't pronounce, but it deals with muscular dystrophy. They've had some headwinds there. That's an example of a stock that could turn around. Biogen, another one. So I think I want to look at some of the healthcare stocks, and healthcare, a beaten down sector that could reverse. So that's what I'm looking at. Am I going all in these names and pounding the table? We have to be there. No, I still think technology leads, but the leadership in technology is rotating within it. So we'll keep an eye on that. And Cloudflare, another stock that's up 8% this morning. NET, the symbol there, trades down here. Stacey Cunningham on the board. I like that one too.
All right, Jay Woods, thank you so much for joining us. We are going to go to the boardroom. Emera is at NYSE to celebrate its listing earlier this year. We are going to go to exclusive coverage. This is Chris Taylor from the New York Stock Exchange. He will introduce Scott Balfour, who's Emera's CEO and president. Take a listen.
233 years. It's a really importantly historical institution for this country, for the world. We grew up right alongside the United States, but the only reason we're here is because of our listed companies. 2,400 companies from 48 countries around the world. Canada is the country with the most companies listed on the New York Stock Exchange outside of the United States. We count our friends and counterparts in Toronto as great colleagues and partners. Almost all of those companies are dual listed on Toronto and New York. So it was great to welcome yet another company from Canada. So thank you very much. I hope you all enjoyed your dinner last night on the trading floor. This building is your new home when you're in New York. We love hosting our companies here for investor days, for offsites, for employee events. So we look forward to having you back in the future as well. But we know of only one way to celebrate our listed companies, and that is by ringing the bell. So without further ado, I'd like to call up your president, CEO, and today's bell ringer, Scott Balfour. Scott.
Well, thank you, Chris, for such a warm welcome. Boy, this is an exciting day. An exciting day for Emera. We're honored to be here on Wall Street, shoulder to shoulder, amongst the global leaders who make up the community of the New York Stock Exchange. Ringing the bell, this is a special moment and an incredibly proud moment. Proud for me, but proud for the entirety of the Emera team. And with that, I want to recognize the Emera team, who are many watching today with an Emera watch party, our 7,600 people, Chris, that many, as I say, watching online. This milestone reflects their hard work, your hard work, your dedication, your commitment to service, to safety, and to operational excellence, and to your belief in Emera's purpose. And so thank you for everything that you do. It's been your hard work. You are the heart of Emera, and really has enabled the journey for us to be here today. And so today we celebrate you. We celebrate our team. Emera today, this is also an opportunity for us to, sort of get to a broader audience, of course, and share our story. Emera is a North American energy leader, as Chris said, with 7,600 employees serving over 2.6 million customers through the regulated electric and natural gas utilities and the related businesses and assets that we own and operate here in the U.S., our biggest market, but also, of course, in Canada and in the Caribbean. For Emera, this listing, being here on Wall Street, represents a strategic evolution. It enhances our visibility in the U.S. markets, it strengthens our access to global capital, and it aligns with our disciplined approach to growth and value creation for our shareholders. We're excited about our future. We're really proud to be part of the global capital markets and to be here today. Thank you for taking part in this moment. Let's make this one to remember. With that, thank you very much.
You just heard remarks from Scott Balfour. He's Emera's CEO and president, and Chris Taylor, NYSE Chief Development Officer. He took his time to thank his employees and share Emera's story. And of course, we're going to hear more of that story when I head down to the trading floor to interview him at the end of the show. And we have plenty more to get to on NYSE Live. But first, NYSE parent company Intercontinental Exchange's cocoa futures are helping set the benchmark for prices behind your favorite Halloween treats. ICE's Judy Shaw has more.
Every Halloween, Americans spend over $3 billion on candy, with chocolate being the most popular and the most purchased candy of the spooky holiday. Behind the costumes and the candy bowls is a global commodity market that makes chocolate possible. At ICE, our cocoa futures set the benchmark for global prices. Each contract represents 10 metric tons of cocoa beans sourced from Africa, Central, and South America. These beans are stored in ICE-licensed warehouses before being sent to our grading room, where samples undergo rigorous quality checks to ensure the cocoa meets exchange specifications. ICE's futures contracts are directly tied to the real cocoa that ends up in many of your favorite Halloween treats. They also help farmers, exporters, and chocolate makers manage price swings, bringing transparency and stability to a market that keeps the chocolate flowing. So from cocoa farms around the world to trick-or-treat bags across America, ICE's cocoa market connects producers, buyers, and consumers, helping shape the price behind Halloween's sweetest tradition. No tricks, just lots of chocolate treats. Happy Halloween.
At ICE, we aim to solve some of the biggest problems in markets. Often these issues come down to a lack of transparency because a market doesn't have the right technology, data, or systems. We address this by digitizing analog markets. Digitizing markets brings transparency. At the heart of this is our technology. It's the same technology which underpins our trading venues, that powers the New York Stock Exchange, that drives our fixed income pricing, and our mortgage platform. Deep trust in our markets has made us the world's largest exchange for energy trading. Our exchanges price the world's most important commodities, many of which support the shift to lower carbon fuels. In mortgages, we operate across the life of a loan. Through electronification, we're making the home buying process faster and simpler. And through our data, we're bringing new transparency to mortgage securities. We're bringing you powerful, fast technology, access to a depth of market data. We're building liquid markets across asset classes and geographies, and we're listening to our customers every day about what you need.
Welcome back to NYSE Live. Last week, Health USA 2025 commenced from Las Vegas. Over 12,000 attendees and more than 2,500 CEOs convened to transform the next decade of health. Jody Tropiano-Green, Health's head of content, joins me now. Jody, welcome to NYSE Live.
Thanks so much for having me in person this time.
Of course, so nice to finally meet you in person. So what were some of the key takeaways from Health? Any standout moments?
Yes, multiple standout moments. I would say as far as takeaways go, you really couldn't go anywhere without AI being a part of the conversation. It was really active on the show floor, kind of hit you in the face the second you walked onto the show floor. But I think we're getting a little bit more realistic about its capabilities this year. So a lot less talk around the hype and what it could potentially do, and more talk around what it's actually doing right now. The health systems and providers and payers in the audience, they wanted to see a measurable impact of the AI solutions being touted and kind of prove the ROI that a lot of these companies are shouting about. So I think it was a little bit more realistic, which was nice to see. Also, longevity dominated the conversations, no surprise there. I think there were a lot of promises, a lot of new companies in the space, but we have a smart audience and they want to see the clinical evidence behind a lot of these solutions. There's a lot of noise out there, so how can we weed through it and see what's actually going to help people at scale, not just people who can afford those solutions.
You talked about separating AI hype from AI reality. What was some of that ROI and what were some of those tangible results that we're seeing in this space?
Yeah, I think a lot of talk around clinical documentation. Those companies really dominated the show floor. Open Evidence announced a $200 million raise at a $6 billion valuation. They're really kind of putting their stake in the ground as a major player. So, they're heavy in research, but they're going into other areas. I also think a lot of the big tech companies, they really are showing their muscle when it comes to healthcare. And, years ago when we thought, what is Amazon and Google going to do in healthcare? I think actually OpenAI, Anthropic, those companies are moving at a much faster pace than even, Amazon, Google 10 years ago. So I think, big tech and what they're doing, and they're really getting into the application layers with providers and with payers and figuring out what are your pain points and how can we work with you to build something unique for your business to solve it.
Were there any announcements or partnerships that came out of the conference?
Oh yeah, so many. The ones I'm most excited about were around women's health. There were some really major announcements in women's health. Two on the main stage that I'm really excited about. Jody Newhouser, who's a longtime women's health entrepreneur, she announced the new company 51ends. So 51 ampersand if you're looking it up. And it's a women-led membership platform trying to be almost the AARP for women's health. And then also Jessica Federer, who I know is a friend of the New York Stock Exchange, she announced the Women's Health Fund, which is a life sciences fund of funds with 60 billion assets under management. So also menopause plays from Hims and Hers, from Oscar Health and Electra Health. So just, a lot of people talking about women's health, but this year we saw it put into action.
And I know this event took place in Las Vegas, and there was a great headline on your website, what happens in Vegas doesn't always stay in Vegas. So why is it important to get this message out into the world about all of these amazing things that these healthcare companies are doing?
Yeah, I think there's a lot of negative media attention around healthcare right now, given the government shutdown is largely due to disagreements on health policy. So, there's a lot of challenges. It's a really complex industry, but I think walking the show floor and seeing all of these budding companies and startups, going to our startup pitch competitions, hearing people like Mark Cuban give the audience a lot of hope.
Jody, I'm just going to pause you for one moment. I just want the viewers to know that Scott Balfour, the CEO of Emera, is signing the guest book. He has come down from the boardroom. This is the ritual that takes place before every bell ringing ceremony. So we have an exclusive look at Scott signing that guest book. And in just 7 minutes, he'll be ringing the opening bell. After this point, the group will go up to the bell and have their moment at the bell. So Jody, I just want to get back to, yes, it's very exciting. It's an exciting morning every single morning at the New York Stock Exchange. We do it twice a day, every day. So I'm so sorry, can you?
I think there's a true power in live events, bringing people together. There's a lot of noise online. There's a lot of AI generated content out there, but I think there's something about hearing the latest developments right from the executives that are doing it that's really powerful and really important.
And I know that in the pandemic, everything kind of went virtual. Do you think there's any significance in this many people in the healthcare space, 12,000 people joining in person, face to face?
Yes.
Was that a standout for you?
Yes, there's so much energy. When you bring all of those minds together under one roof, there is just a palpable energy in the room. you're all cheering for each other, and there's a real sense of collaboration, and even amongst competitors. We had a lot of competitors speak on stage together. We had Nabla and Ambience, Hims and Hers and Row. We had OpenAI, Microsoft and Google on stage together. It's kind of like that rising tide lifts all ships mentality, which is really nice, and you may not see that virtually, but you do see that in person.
Yeah, I've heard that at conferences before, like even competitors are getting together, and I think there's a greater mission here is to be helpful, really.
Yeah.
And what is your hope for the next health conference?
Well, we didn't quite get Oprah Winfrey this year, but I hope we get her to come speak next year. So, that's just my own personal.
I hope so too.
Yeah, but I think just more action, more doing, less talk, more getting kind of into the weeds and fixing a lot of these complexities in healthcare, and more announcements.
Amazing. Jody Torbiano Green, Health Head of Content. Thank you so much for joining us at the New York Stock
Exchange.
Exchange.
For having me.
Don't go anywhere. Amara is going to ring the opening bell next.
Real estate is a major asset class, yet there is little visibility into loan dynamics. At ICE, we're bringing new data, technology, and fixed income expertise to capital markets, creating transparency into residential mortgages to better anticipate loan prepayment, defaults, and losses. Transparency, price discovery, innovation. Mortgage data happens here.
Across global markets, data underpins every decision that is taken. At ICE, we provide quality data and analytics across multiple asset classes, from fixed income, energy, commodities, and equities, to areas like climate risk and the entire life cycle of a mortgage. To help inform trading decisions, our pricing and reference data covers millions of instruments. In fixed income, our data can help reimagine your workflow. In energy, our oil and natural gas data is used by global traders, while our energy transition data helps navigate the shift to a low-carbon economy. In mortgages, our data covers the life of a loan, from origination to secondary markets. We can meet your data needs wherever you are. Whether it's pre-trade analytics, pricing, or post-trade reporting, our data can offer a foundation for sound decision-making, helping market participants to manage risk and spot opportunity.
In just a moment, Amara will ring the opening bell to celebrate its recent listing on the New York Stock Exchange, trading under the ticker symbol EMA. The Nova Scotia-based firm is an energy and services company serving approximately 2.5 million utility customers across Canada, the U.S., and the Caribbean. Amara's portfolio includes regulated electric and natural gas utilities, plus related energy businesses and assets. Doing the honors of ringing today's bell is CEO and President Scott Balfour. You just saw him in the boardroom. You saw him signing the distinguished guest book. He will be ringing the bell next. He's led the company since 2018. And later in today's show, I'm going to head down to the trading floor for a one-on-one interview with Balfour. We're going to discuss everything from the significance of today's celebration to the company's game plan entering 2026. We are just a few minutes from the opening. Equities are fractionally higher. Everything I'm seeing on my screen is in the green. We are coming off of fresh earnings from two of the biggest names of tech. In tech, shares of Amazon are up over 12% in extended hours trading after the firm reported a 20% increase in its cloud computing units revenue in Q3, and Apple is also on pace to open in the green in just a few moments after CEO Tim Cook said it expects Q4 revenue to be, quote, the best ever for the company. Investors in the markets are also monitoring the latest developments on trade after U.S. President Donald Trump and Chinese leader Xi Jinping agreed to a one-year trade truce following a meeting in South Korea this week. We are going to go to the opening bell now. Let's hear Scott ring that bell.
What if we start going after the big banks? We grow into more countries, go into Europe, we go into US. Standing here today, 20 years later, we actually disrupt the whole retail banking industry. We're looking forward to disrupting the retail banking industry because it has made too much money and it hasn't taken the best interest of its customers. And that's what we're trying to do. And the billions we've given back in zero interest to our customers amazing.
At NYSE, our mission is grounded in innovation. But our strategy is built for the long-term value creation. Our technology is only as powerful as the lives it improves. And at the center of everything we do are patients. This is just the beginning. We look forward to continuing this journey with all of you together.
We are not your typical tech company. We build software for transit agencies. Our users are often the city's poorest residents, seniors, people with disabilities. In this IPO, it's an incredible moment. But looking beyond this moment, I really feel that we're just getting started and some of the best is yet in front of us. And I can't wait to see what we'll do as a public company.
Welcome back to NYSE Live. U.S. stock markets are officially open for trade. Joining me now is Joy Yang. She's the head of product management at Market Vector Indexes. Joy, welcome to the New York Stock Exchange.
Thank you, Ashley, and happy Halloween.
Happy Halloween. So great to have you back. So as trading gets underway, what are you looking for in this session today? What storylines?
Well, it's pretty scary out there, and I'm not talking about Halloween. I'm talking about like the fear of some of the headlines that we're seeing, which is, this trade tension is going to continue. Government is still shut and the debt is still high. And yet we're seeing like this euphoria in the markets with AI. NVIDIA at $5 trillion. We have ETF flows, and this huge, massive spending on AI continues. So I think the question really is, where is this fear? And why is the VIX so low, and why aren't investors concerned?
All right, and we did see 5 of the Mag 7 companies report this week. Amazon and Apple reported yesterday after the bell. What are your takeaways from those reports?
I think we're definitely seeing that this AI story is real. There will be productivity, but who are going to be the winners? There's strong revenues, but there's also like strong expenses and costs, and they're massive. So I think how long will it take to figure out who's going to be the end winners and when will they show, real profitability. So I think it's important for investors to remember that, they should be thinking about, what are the risks in the market. There's a lot of talk about bubbles out there, and I think that is a real talk. But again, when will the bubble pop? So the fear here is really expressed as a fear of missing out. And that can be very dangerous if you're just kind of riding, the train up the hill, because it's got to come back down. So I think investors should really also think about, fear on the other side is, the fear of loss. So we have what we call a market heat index. It's for cryptos, but the same approach applies to markets across the board, which is, when you're looking at trends in the market and you're looking at price, you should think about the depth and breadth of that trend. So in the US, we have markets are up 15, 16%. But when you look at the equal weight index for the S&P, it's only up 7%. And you should also think about the relative, strength of markets. US markets up 15, 16%. But look abroad, European markets are up 20%, and our all China index is up 30%. So on a relative strength, basis, there are opportunities elsewhere and abroad. And applying this heat index to our crypto markets, we saw this big sell-off in crypto and gold. But the heat index is actually telling us that this is an opportunity for investors because, we saw a lot of speculators get out of the market, and there's still strong fundamentals underlying the market. We know that regulatory shifts is positive for crypto, and we know that as institutionals come into this space, they're going to build this robust foundation. So as speculators leave, you're going to have what's standing left is strategic investors. And that's also what we're seeing in gold is almost the opposite. We had, for a long time, gold was this boring asset. We had strategic investors, but then recently, with the huge velocity in price momentum, we saw a lot of speculators come into the gold market, and then they just as quickly got out. So now we're left, with still the underlying structural foundations of why people invest in gold is still there, which is, the risks are still out there with sovereign debt, corporate debt, and the underlying drivers of the original price strength, which is central bank buying, is still strong. So, these are all kind of the aspects that investors should think about when they're looking at fear in the market, whether it's fear on the top of the market, which is fear of, missing out, or fear on the bottom, which is fear of losing out, because then you're too afraid to understand when you should get back in. And I think those are important,
Yes, and I mean, despite the uncertainty, markets really are rallying. The S&P 500 just closed above 6,900, so perhaps there are, opportunities there. But thank you so much, Joy Yang, Head of Project Management at Market Vector Indexes, for joining us.
Thank you.
Still to come, Huntress earned a spot on this year's Cyber 60 list as it helps make cybersecurity easy for businesses. But that's not the only thing this firm is celebrating this year. Its co-founder and chief technology officer tells us more. And later, today's bell ringer, Emera Chief Executive Scott Balfour, will join me from the trading floor to discuss how his company is well positioned to meet the evolving needs of the energy sector. Stick around.
Because we have the NYSE coming here because of the tremendous business success that we have in Texas. There's a new phrase, Y'all Street. A new phrase, this expanding across America, across the globe. One thing we know in this state is the men and women who go to work at these businesses every single day that make Texas what it is. We got to keep our vision going forward. And we want to thank you for coming here and locating right here in Dallas, Texas, a trading exchange. Give it up for NYSE, Texas.
At Angel, over 1.5 million members of the Angel Guild decide which stories we want. Stories that inspire our kids and uplift, not divide. This moment belongs to Angel's families, team, investors, filmmakers, guild, and next generation. ANGX isn't the goal. It's a symbol of our launch into the next chapter. Today we ring the bell of a global and growing movement to blanket the earth with stories that amplify light.
Welcome back to NYSE Live. On Thursday, Fortune rang the opening bell to celebrate the third edition of the Cyber 60 list, presented by Lightspeed and AWS. The Cyber 60 list spotlights several of the most innovative and fastest growing companies in cybersecurity that have not had an IPO, acquisition, or a significant exit event. One of those companies is Huntress. Its co-founder and CTO, Chris Bisnet, was on the Bell podium. There he is, up there, and he joins me now. Chris, welcome to the New York Stock Exchange.
Yeah, thanks for having me.
So we just saw a clip of you on the Bell podium. What was that like? Was that your first time up at on the stage?
Yeah, I mean, it's really amazing to just kind of see this and the history behind all of it, and to be part of it is just, it's very exciting.
There's a lot of energy on the floor and in the room when that bell rings.
Yeah, for sure. I mean, just like seeing kind of behind the scenes and how people act and, kind of the circumstance of, people getting to sign the book for the bell ringer, and all that was very, very cool.
Awesome. We're so glad you got to be a part of it. And tell us more about what Huntress does.
Yeah, so we provide cybersecurity to companies who maybe don't have a full security team or can't do 24/7 and are looking for somebody to help them with their cybersecurity and help them be more secure.
All right, and I understand that you're experiencing growth at 60% annually. Can you, congratulations. Can you talk more about that?
Yeah, for sure. I mean, we're always pushing to grow more, grow faster. And so we've done 60% year over year. We are forecasting to end the year somewhere between 185 and 190 million annual revenue. And we're planning for next year, and we're looking to do another 60% year over year growth. So for us, it's a lot of growth, and we really are just excited to be able to do more for our customers.
And in terms of like working with Huntress, if I was a company and I signed on and I didn't have that full security team, what does that process look like in practice when I'm working with your company?
Yeah, so you'd install a piece of software on all your machines, and that allows us to collect information about what's happening there, who's doing what, and identify whether or not there's malicious activity. All of that then comes back to us, and our SOC team reviews it to identify what's good, what's bad, and if there's anything bad, we will remediate it for you automatically. So we'll take the actions for you. That way, if something happens at night or on the weekend or on a holiday, you're not stuck trying to figure it out for yourself.
How detrimental or impactful could a cyber attack be? Like, what have we seen happen?
Yeah, I mean, it can range from not too much, where it's just kind of a small impact to a day, a couple of users, but we've seen it on the high end of where whole companies are stopped from being able to do what they need to do and stopped from being able to do business. Employees are sent home. Customers, like the end customer, is very impacted because they can't purchase or they can't complete what they need to do. So it ranges, but if it's ransomware, it can be pretty bad.
Do you think with the rise of AI, we are seeing more vulnerabilities in this space? Because AI is getting so sophisticated now. We have these agents and agentic agents. What are you seeing? What is your take on that?
Yeah, I mean, we're definitely seeing more of it on both sides, right? Because more code is being written by these agents, and more code being written means there's kind of less time to review it, less people to review it. But we're also seeing people try to apply the AI and those agents to identifying vulnerabilities and figuring out how they can use that from the other side. So we've seen attackers do it to leverage their phishing emails, right? People used to talk about the emails that were just, poorly written, they were clearly not grammatically correct, all of that. Now AI makes that super easy for attackers, even if English is not their, first language, they can craft a really great email. And so it makes some of those things a lot harder. So we see it on both sides, both defense and offense.
And you also, earlier this year, announced a partnership with Microsoft.
Yeah.
How has that impacted Huntress?
Hugely. So we went to work with Microsoft because they have a lot of the same customers. They're people who are getting stuff done, but they don't have a security team, and they're asking Microsoft, hey, how can you help us? And so we're partnering with Microsoft to really step in and be able to help those folks who don't have their own security team and bring them the same level of security you'd get at a Fortune 500 company.
And what is next for Huntress?
We're going to continue rolling out more products. Our customers are always coming to us and saying, hey, how can you help with this? I have this problem. What should I do here? And so for us, it's how do we build more of those products to expand and cover more of their security stack.
All right. Well, thank you so much for joining us at the New York Stock Exchange. Chris Bisnet, Huntress co-founder and CTO. Thank you so much for joining us.
Thank you for having me.
Glad to have you back. In other news, today is Halloween, and NYSE-listed Build-A-Bear Workshop is celebrating in style with a lineup of Halloween-attired stuffed animals. I recently spoke with the company's CEO, Sharon Price John, about Build-A-Bear's recent success and how its game plan aims to provide a treat to investors. Check it out.
Oh, it's such a wonderful story, and it starts all the way back to 1997 when our founder, Maxine Clark, had a fabulous idea because truly she loved teddy bears and wanted every kid to be able to make their own. But what ended up happening was, in her visionary way, she really was a pioneer in experiential retail. And she wanted for families to come to Build-A-Bear and have this memory-making moment together. And that heart that you just referenced ended up being a key part of what has created this indelible brand equity for the business that we've ended up having a tremendous opportunity to build upon.
And can you walk us through the Build-A-Bear experience? When you enter a Build-A-Bear store, take us through step by step, including, I know the bears get their own hearts.
Yeah.
What does that experience look like?
Well, the experience has been honed over the years, and we try to find a balance of consistency, but an opportunity for our guests to have their personalized, customized approach to going to Build-A-Bear. But the basic concept is once you get in the store, you get to choose among a wide variety of furry friends, stuffed animals that are unstuffed, and then you go to the stuffing machine where a bear builder will help you stuff the bear. You do get to push the pedal. Kids love that. And stuff the bear. And there's a lot of things that you can put inside the bear, whether it's your own personal message or a pre-recorded sound or a scent or a heartbeat. But as you alluded to, one of the most important parts of it is going through something called the heart ceremony, where it's very customized and can be as silly or as not as you want it to be, because we have people of all ages that come to Build-A-Bear to do this. And sometimes adults don't want to do a dance or rub it on their head to make it smart or rub it on their arms to make it strong. And we're like, okay, we got you. But then you stuff it up and you get a hug test, dress it, name it, and move on. So it's really fun.
Clearly it's resonating with the public because your stock has surged almost 65% in the past year. What do you attribute this growth to?
Well, there's been a lot that we have done. I've been there for 13 years now, and clearly we've been through a few ups and downs in the last 13 years, as have many, many companies, whether that's a global pandemic or a retail apocalypse, if you can't come up with another name, for some of this stuff. But we've been very clear that it's a combination of what we've done and then sort of what's happened in the marketplace. And what we did is first stabilize the business and return it to profitability. But there was nothing wrong with the idea. There was something wrong with the operations. So we got very focused on the operations side and changed a lot of ways that we were doing business. And that is to be much more bottom line focused as we turn the business around. And we went from being unprofitable to now the fourth consecutive year of record profitability. But that was shifts in the way we operated our stores, to the way we imported products. I mean, it's really across almost every link in the value chain that it took to have that kind of turnaround. But the bigger idea, once we stabilized, was to be able to appeal to what we call the more strategy, the expansion of the addressable market. You were just speaking about teens and adults. 40% of our sales now are the expansion and reinvention of our retail experience to not be just about malls. So now we're in tourist locations, hospitality, cruise ships, and we've expanded around the world in 30 countries. And then the reinvention of the entire idea on how that would translate an experience-based retailer online. And that unlocked an entirely different new business model for us of being able to be a gifting a site, being able to provide collectibles for the older consumer. That gave us latitude on pricing, and all of that worked together to start to build the business for in more places, for more people, for more purposes, right? The second piece is very trend-based. We may be a part of this, but there is a stuffed animal trend going on right now, and it's been happening for a couple of years now, and this trend of kidulting. Kidulting is an emerging sort of a surge, I would call it, of adults and teens wanting comfort things, wanting things to return to their childhood, wanting to do things fun, and then you combine that with kind of a DIY trend and the shift back to preferring experiences over things. We're experience where you get a thing. So we're in this kind of magic space, and it's been really remarkable. And the best thing about it is everything that's happening is still on mission for us because we're still adding a little more heart to life.
Today marks a major milestone in our journey.
The book is frozen, 2.2 million.
This building has been the backdrop for some of the most important chapters in the United States history, and it's truly an honor to stand here as MyX becomes part of that story. As the MyX enters the public markets, we do so with the same core values. Focus on superior tech, award-winning customer service. That's what's guided us from the first day to today. We've waited years for this moment, and just like in trading, timing is everything. Our time is now, and I can't wait to see what we achieve next.
Today is another starting point on our journey. And as we all know, the launch is just the start. So let's all get ready to design Figma's future together. Because today, design is going public. Our community's craft is going to literally define the way that society interacts with technology. It's creative, it's vibrant, and it's global. I am so proud of this team. The future of Figma, it starts now.
This vision to be listed here in the New York Stock Exchange, the cradle of capitalism, the home of free enterprise. It's been really awesome. To our bullish colleagues, you're the hardest working, best group of people I've ever worked with. And we all believed in this promise that, hey, this create a better world and we can increase efficiency and we can be part of the free enterprise system.
Welcome back to NYSE Live. Earlier this hour, NYSE listed utility company owner and operator Emera rang the opening bell to celebrate its recent listing. Joining me now is today's bell ringer, Scott Balfour, President and CEO of Emera. Welcome to the New York Stock Exchange.
Oh, so excited to be here. Thank you.
So we've been following your journey all morning. You started off in the boardroom where you thanked your 7,600 employees, and then you also shared Emera's story. Can you recap that for us? What is Emera's story?
Well, we're a 7,600 employee company that is that owns and operates a number of regulated electric and utility assets and related businesses here in the U.S., largely in Florida, but also in Atlantic Canada and in the Caribbean.
And why did you decide to focus on those regions?
Well, really, it's about the opportunity for growth. And for us, it's about owning businesses that are in high-growth regions with constructive regulatory environments so that we can continue to deliver excellent service to our customers, but in doing that, also create value for our shareholders.
And in terms of working with these, owning these utility companies in these regulated environments, can you break that down for us, for the viewer who may not be that familiar with the energy sector?
Yeah, so being a regulated utility means that we're serving a number of customers with an exclusive franchise to provide that either electricity or natural gas to their homes and their businesses. And the regulation part of it is really where a third party reviews to make sure that our cost profile is prudent, is appropriate for customers, and establishes the appropriate rates for customers that make sure the rates are fair and affordable for our customers, at the same time ensuring that the utility itself is financially healthy, that allows us to get a return on the capital that we invest.
And your stock has seen a lot of momentum. Congratulations. Why did you decide to dual list on the New York Stock Exchange?
Well, look, yes, we're Canadian headquartered and listed on the Toronto Stock Exchange, but most of our business is now in the U.S. 70% of our business is here in the U.S. And of course, in this iconic place, and the New York Stock Exchange provides better access to global capital markets as we continue to grow, gives us more access to investors and more investor access to us. So really an opportunity to extend our platform and extend our opportunity to raise capital in some of the best capital markets in the world.
And can you talk about the company's origins? I understand it started in the 90s and its mission.
Yeah, so we started in 1992 and in Nova Scotia, the very east coast of Canada, but through acquisitions and organic growth, we've grown to where we are today, a $14-15 billion market cap in US dollars, operating 6 different utilities in those regions that I described, and really excited about our future. Right, this is a moment of time for folks in our industry, for businesses in our sector. Electrification is driving a lot of growth as we invest in reliability and serving our customers in growing regions. It's creating an opportunity for us to deliver great value for our shareholders too.
And what is your hope for Emera's chapter moving forward?
Just continue to serve our customers with excellence, and in doing that, continue to deliver great value for shareholders. And you're right, we've seen some very good share performance recently, but we're really excited about our future. Couldn't be more excited about the future that's ahead of us, and being part of the New York Stock Exchange family and the access to capital markets there to help to support and finance our growth is going to be an important part of that journey ahead. We're really excited.
And I understand that serving your customers with excellence is one of the values of the company. Can you talk about how you deliver on that?
Yeah, well, first of all, it's making sure that we are very prudent with the costs that we incur, and make sure we deliver reliability, continuing to invest in reliability, and at times where we're seeing more frequent and more severe storms, making sure we're investing in storm protection so that the system can hold up during those events and respond quickly to when they occur. So reliability is a really, really important thing. And then affordability is just making sure that we are making sure that energy that we deliver to customers is as affordable as possible for those customers. So that's really, the key components of operational excellence for us.
Do you think reliability builds trust with the customer?
I think it's critical. And as we all know, as we sit, if ever your power goes out, those moments as a customer, it's like, I just want my power back on. And so reliability is critical. It's foundational to operating a good, healthy utility, and it's certainly a core part of what we do.
Scott Balfour, CEO and President of Emera, thank you so much for joining us. We are so excited to have you at the New York Stock Exchange and as part of our family moving forward.
Thanks so much.
That's going to do it for the end of the show. We will see you on Monday. Kristen Scholler will be back in the anchor chair.
We're here to celebrate where we've come from for the last 233 years. Today is a new chapter. Today is a new age. And I think you'll agree that the new chapter is getting off to a good start. The right idea, the right approach, and the right technology will get rewarded in any market.
We can change the outcomes of people's lives everywhere.
The leap of faith, the vote of confidence, that is why we're standing here today.
getting ready to ring the bell on the New York Stock Exchange.
Innovation, space, defense, national security is great, but our mission is you.
And what we're building is really, really important for the future of humanity.
In an era of unprecedented technological advancement, companies like Voyager don't just adapt to change.
Rest assured, this is a milestone. It's an important one, but we're just getting started.
It's not the finish line. We have a lot of work to do, a new battle to continue to be waged.
So Voyager's future, best days lie ahead of us, not behind us.
The belief that every individual has the right to build a dream, to live peacefully, that is what Voyager's mission is. And with that, let's roll.